I know there's a lot of stories about quant firms pumping out 8-figure bonuses and stuff like that, and it definitely does exist. But I'd say at the 5-year mark, you're probably an experienced trader, but not a senior one. So definitely mid six figures, we're talking $500,000, $300,000 to $700,000 is a very safe bet.
Thank you so much for coming on today and agreeing to this. This is going to be a lot of fun and also much requested because the job of a quant trader is something that is considered lucrative and mysterious. So thank you for agreeing to this. I feel like we're going to learn so much. So without further ado, let's just jump into it. So why don't we start off with just a brief intro about yourself and maybe just a little bit about your background.
Hi, I'm Worthan. I guess the easiest way to start off would be to start with undergrad. That's where most people probably are planning their journey. So I went to Boston College, which is a very heavy finance school, and I was finance and econ major. And at the time, everybody pushes towards two types of jobs, investment banking and consulting, which is classic from a finance school. So I went the investment banking route, and I got into investment banking for my junior internship and found out, oh, this is not what I want to do. This is really not what I want to do. But granted, I did have a very good time studying general finance. I started trading my own portfolio in college, and it was something that I was really into. So I didn't want to leave the finance industry as a whole. I just thought, I should pivot and go into trading. But there's two types of traders, really, if we talk super generally. There's the traders who trade the classic style, the fundamental style or some type of technical analysis. And then there's the ones who are using some type of quantitative method. And quantitative trading is a massive field. Anything from somebody coding their own little Python script, which tells them when certain tickers are up or down, all the way to people who are doing completely automated, neural network style stuff. That's all quantitative trading. But I just knew that I wanted to be on that side. So I ended up going to UPenn to do a computer science degree in the MCIT program, and I was in the same year as Tina, to get the technical background, not only to be able to code at a competent level, but also to have that on my resume, because quantitative firms want people in general, again, a generalization, that have this ability to do either some type of logical analysis or technical analysis or a coding style analysis, because you spent so much time dealing with data of some type and you at least will know how to deal with it versus somebody who hasn't had that background.
Awesome. That was good. You covered through everything up until now since undergrad. So I actually had one question. So you were doing investment banking, you're like, this is not great. So what made you think that you wanted to go trading specifically?
So I had been trading my own portfolio initially with stocks, but when you have a small amount of capital to use, stocks are boring. So I went into options.
And it's boring,
and yeah, they don't move very much. Okay. So it's not, 1% is not a lot when you don't have a lot of money. Okay. But options allow you to do leverage. But the thing with options are, as a derivative, they become much more complex. And because I was so interested in that, I ended up wanting to do that as a career, or at least as part of my career. And I wanted to do it well. And to be able to understand the options market on a non-retail level, you do need some sort of technical background, or at least enough math to understand. And when you want to go into an options trading firm, I really think that you really do need to have some sort of technical analysis, either whether it be a math degree, a computer science degree, even a physics degree, or some type of research-based degree. It could be undergrad or grad school, but because that was my interest, I ended up choosing MCIT and going that direction.
Gotcha. Yeah, I think you were mentioning it as well. It was either computer science, physics, or math, right? Those are the people who usually go into.
Yeah, just the degrees that tend to have more exposure to math. There's some people who do, like econ from U Chicago is a really famous program that's a really math-heavy econ. That would be perfectly fine as well. It's just a lot of whether it's the interview question or the day-to-day, it ends up being a lot more math-heavy than traditional finance. Now, I know some of the interviews are super notorious for having absurd questions. Your day-to-day would never look like that, but they are clearly screening for a certain type of individual.
Yeah. actually a good segue. So my first question after just the intro is like, what exactly does a quant trader do? Because we hear this term being thrown around a lot, and it's like, oh, this person's a quant at a firm. They like trade but with models. Like, what does that mean?
So it's difficult to pinpoint exactly for each person because whether you're a quant trader at a bank or you're a quant trader at a high frequency prop shop or you're a quant trader at a hedge fund, your day is going to look different even within those specific categories depending on where you are. So for me and for the more senior traders that I see, the easiest way to explain it would be, in the morning, you're still going through the same things as many other traders. You're still looking at news that's coming out. You're still looking at the market. The difference is you're more involved with how am I going to use my tools to respond today, rather than maybe what is the fundamental analysis of Microsoft today. Like, how has that changed? So just through a general day-to-day, the first thing I'll do is I'll look at news. I'll see what's happening. I'll see, how have the fundamentals on a technical level changed? So fundamentals of the market rather than fundamentals of a company. How has that changed? Then I'll look at stock charts in the morning, how things have moved. Since I'm trading in an options firm, the most important things to me are the Greeks. If you guys are not too into options yet, they're the drivers behind the price of options and how things will move. So what I'll look at is, how do I think these specific aspects, these Greeks will change today? How has the underlying price of the stock?
What is a Greek?
So the Greeks are the really 5, but in this really low interest rate environment, 4 aspects of pricing that deal with the options, famous options models. Now there's a number of them, but the one that most people know is the Black-Scholes model. Without getting too deep in it, because this question is just about day to day, they're really about how the options move and how we expect them to move. And they're completely based as a whole. They are mathematically founded, but the way they change is based off of the way prices change. And how do prices change? It's just supply and demand, like anything else. So when these options prices are changing, that's what I'm analyzing in the morning. How do I think the prices will change? Where do I think opportunity will be? And then I'm waiting for, the opening bell, 8:30. Options don't change. Oh, I'm in Chicago, so 8:30. Options don't change or don't trade before market, as a general rule. So I wait for that 8:30 bell, I get all my analysis, and I watch how things move. And then from then till 3:30, again, because of Chicago, or rather 3 o'clock, I am looking just to make trades that are going to either make money in the long term when I see inefficiencies, mispricings, maybe there's something I want to get in immediately and get out, maybe there's something that I want to hold. It's really not too different from somebody who'd be trading stock. It's just what I'm trading is different because, again, options firm, and the way I'm looking at it is very model heavy. I'm going to have a bunch of tools up all the time. I'm going to be looking at those tools for different signals or different notifications that might spark my interest or tell me that something might be an opportunity. And then after 3 o'clock, mostly just, checking my models. I'm not on an automated strategy, so I'm still putting through all of my trades. I'm using the quantitative side to let me know. So I'll be changing those tools if I think they're off, or monitoring them, making some changes. One of the great parts of being on the quant side rather than the traditional side is pretty much once I'm done, maybe an hour past that, I'm done. Unless the model's completely broken down, there's nothing else to do. The options market also doesn't trade after 3 o'clock. So all the time after that, as long as there's no risk of an options being exercised, it's really just model analysis, and then you're done for the day.
Let's talk about a well-known fact. It's still shrouded in mystery. We know that quant trading is an extremely lucrative career, sometimes stressful, but still very lucrative. And there hasn't been that much information about how much people make, how much to expect, and then what's the career growth. So if you don't mind, maybe even going into a little bit of detail, but how much money do you expect to make just coming in at entry level, maybe 2 years down the line, 5 years, 10 years?
Sure. I'll talk in really general terms, for privacy issues for my firm, but also because I think it's more applicable to talk in general terms. So when we think about quantitative funds, most of the time they're pretty well known in the sense that at least in the market, they have some sort of reputation to uphold, right? So we're not talking about these firms where you're coming in and having to bring your own capital and trade your own capital. They're not these types of firms. So the quantitative firms are going to have, as a whole, a higher starting salary. And a lot of the reason for that is their competition is, people going into data science, people going into engineering who might be more into the trading side, people who would be doing research, these people who have opportunities which tend to pay more. And due to that, the base salary tends to be in the higher 5 figures into the 6 figures. And when you include signing bonus, it can get wild. There's people who I know have signed for some of the bigger name firms, the Citadels, the James Hughes of the world, who have $200,000, $300,000 signing bonuses. But that is definitely an exception to the rule. I think your first year minus your bonus, if there is one for performance, you can expect a high 5 figures into the 6 figures, depending on where it is. Some of the firms definitely pay less, but there are rewards that they give you on the other side, or some other sort of compensation, whether it be intellectual compensation through teaching, or whether it be, higher portions of bonuses later on. I think you have a lot less risk in the quantitative side getting a firm that's really shady. They don't tend to exist so much. It's a lot higher barrier to entry. You have a lot of tech that you need to run, right? They have a lot of expenses that these other firms don't have. So you don't get these like chop shops where some guy came in and he's like, oh, bring your money and we'll give you 80%, right? But if you lose, you lose, right? That's not really something we see.
What about I know the training period also varies, like maybe a year, maybe 2 years, but after the training period, say like your first 2 to 5 years, how much are we expecting here?
I know there's a lot of stories about quant firms pumping out 8-figure bonuses and stuff like that, and it definitely does exist. But I'd say at the 5-year mark, you're probably an experienced trader, but not a senior one. So definitely mid 6 figures, we're talking $500,000, $300,000 to $700,000 is a very safe bet. Now, it can go definitely higher than that. If your firm has a fantastic year, or if you're a very high performer, maybe you're an early desk lead, or maybe you get your own group to run. In those cases, hey, who knows? Maybe you are getting that 7-figure, 8-figure bonus by that time. But I think mid 6 figures is reliable. High 6 figures in a good year, very reliable as well. Many quant firms do well when there's a lot of volatility. The quantitative models do well when people are moving the market around, and they tend to do less well when the market is not volatile. So, years like 2008, right now, election years, the quant firms do well, and people tend to, of course, do well with them.
Gotcha. And let's say after 5 years, once you're considered a senior or a desk head, how much are we expecting here?
When you get into a desk head, I think you can consider the bonus on the scale of a senior VP or an MD trader or iBanker at a large bulge bracket bank. So I don't want to say like, oh hey, you're gonna become a desk head and make 8 figures. Like that's not something that I can promise, and that will depend so much on firm and how good your desk performs under you. But you're definitely getting into these very high level bonuses, these bonuses that you hear about, the bonuses where if you go on Glassdoor and look up these huge name companies, you see like the very extreme on the right hand side, that could be a lot of money. That's realistic at that time period.
That is a lot of money. I'm like speechless because say like some people go in after their undergrad, they're like 21, 22, right? 5-year mark of 27 usually, and you're making mid 6 figures around that time reliably, right? So that is a lucrative position, and then if you keep going up, it ends up being pretty much the same as an iBanker, I guess. Like if you're going VP, but there's probably a higher chance because I feel like you're in banking or consulting, it's harder for you to move that much higher in the level.
Yeah, the one thing I'd mention is in iBanking for the VP level, there aren't so many, and there's a lot of reasons for that. IB dropout or iBanking dropout is so high.
Yeah.
But also there aren't that many VPs, right? And the time period to get to that senior VP level can be 15 years. The time to get to an MD level could be another 5 to 10 years past that. You really don't know. And MDs are actually limited, right? You can only have one per group, and they aren't spitting out new groups for you. And then on that side, compensation is probably acceptably similar. It might be higher for some MDs at an investment bank, and it might be higher for some very senior traders at a quant fund. The one thing I would warn about is that in other career paths, like investment banking, usually the reason that people leave is they don't enjoy the work anymore. They want to do something else. In software engineering, it's very similar. People don't enjoy the work. They want to do something else. But most firms, most high-end firms, you aren't looking over your shoulder worrying, did I not perform well this year? At a lot of quant funds, that is the danger. So you do get this higher potential salary 5 years down the line, but you may be giving up salary in day one. You might be giving up salary in day one, and you might, have that added pressure of always needing to perform.
Right.
Your job is really tied to your performance. You don't get the opportunity to perform poorly and say, well, you should keep me on.
Right.
You know what I mean? Yeah.
That's also why you guys have, your base is obviously pretty good, but the most money comes from the bonus, right?
Yes, it's almost all, it's all performance based. Realistically, once you're down there, the base is a negligible portion of what you're making.
Right. Cool. So we actually had a lot of interest from our viewers as well about there was a lot of interest in terms of quant trading, the role, differences between the roles. So why don't we get into some of the questions that people submitted? All right. So first up is from the Final Ultimatum. Seeing as these type of roles aren't too common, I'd like to know what entices people to go into roles as a quant trader in the first place, as well as what channels you would need to look at to even get a quant trader interview in the first place.
Yeah, there's definitely fewer roles here than in traditional trading and definitely in banking. But I don't think it's that few. I think there's a number of firms. There's probably 5 to 7 firms which are very, very big names, and then another 5 to 7 that are regional, and then a bunch of smaller ones, heavily centered in Chicago if you're in the US. So as far as what entices people, that's a difficult question for me to answer. But as we talked about, from my background, it was something I was always interested in trading, and I was interested in the quantitative side of things. So it was an easy combination of the two. I think there's a lot of people who are mathy who want to do finance. There's a lot of people who enjoy the dynamic part of markets. It's like honestly, I know it's a cliche, but the day is always different. Like there's always a new challenge. Those are some of the big ones. People who like finance, who are math people who like challenges, people who like dynamic jobs. Definitely some people who are interested in money. That's definitely a thing in finance in general.
Yeah.
You get some of that. But definitely the other categories are generally what you see. What channels I would choose to look at, if you Google just like best quant funds, you're going to get a name of the 5 to 10 biggest funds, right? Some of them have smaller hiring quotas. They aren't hiring all the time. Some of them are hiring every year. They always have a program. I'd say there are around 5 that are always hiring, and then there are a number of regional firms who will be hiring regardless of where you are. Of course, New York, Chicago definitely is number one. But any big city at least will have a few. Definitely reach out there where you go to school. If you're not in the US, it's a little bit harder for me to give you recommendations, but definitely like the European major cities and across the US will have options. The difficulty will be finding the really small firms. Those ones you're gonna have to Google around or go on LinkedIn and find, they're looking for 1 or 2 people. But it's always worth it to give a shot, always worth it to send in a resume. You never know. And just because there are a number of firms, but there are less jobs than other industries, take your shot, right? Once you get into the industry, everything becomes easier after that point.
That's true. It's always the first step, right? All right. Second question. I am sorry if I'm butchering all of your names. I'm going to try my best. From Burke Akaranguchu. Okay, Burke. Do you see anyone from a non-traditional background that holds a quantitative role? He says, I really like math, but I don't exactly have the job experience they look for. Guess I'm wondering what's the most important set of things to land such a role. I mean, I feel like you yourself kind of have a non-traditional.
Yeah, I'm somebody who was doing, some of the more accelerated math before college and then completely nothing. Finance is in most schools, finance is a very non-math major, right? And econ at a non-math school is a non-math major. So I am myself am not, a traditional candidate. What I would say is you need to know enough math to pass the interview. It's not hard math. It's something that you can learn. There's a number of books about it. There's one I can't remember off the top of my head, but I'll let you know, and then you can put it in the description or something. But really, if you just Google for Glassdoor questions, a lot of brain teasers, a lot of mental math, a lot of probability, but it's not high level, graduate level probability theory. What I would say is that it helps to have, every market is like, every job is like this. They're always like, oh, well, part of the requirements is having done something in the job, right? So it definitely helps. But if you show interest and you know how to pass the interview, there are enough firms that will give you the benefit of the doubt to throw you that first interview. Just like in engineering, the first interview in most of the quant funds is this automated online test, right? It's not going to be an engineering test most of the time. It's going to be some type of math test, some type of speed math or some type of logic, brain teaser math. If you can pass that test, you're on the same foot as everybody else. Yeah, so there's definitely opportunity. Definitely helps to have a little bit of background, but that background can be achieved, by participating in some type of program that gives you that technical background, or I wouldn't recommend like you go out and make your own trading algorithm, but if you're still in college, maybe being in a club that does that or reaching out to your network. As long as you can get that first interview, that's the major barrier to entry.
And I like yourself because you were trading beforehand. I guess that was something that was also kind of
Yeah, that's a fantastic one as well. If you're trading what that firm wants, they might extend you an interview just off of that. The first round interview is so cheap for these funds and for these companies that have these automated systems. It's really nothing to them. So as long as you can get to that stage and pass it, you're on a really good track.
Yeah. Awesome. So the next question is from Toros Diori. Do you need trading related projects or have some rough idea about the domain is enough? I guess that's kind of related.
Yeah, that's related, but I'd say there's like two separate things there. The first one is trading related projects. You don't have to, but like any other thing, you're building an image that the company is going to like or not like to get there to be interviewed in the first place, right? So let's say I'm an English major who has never done anything, has nothing related to finance, trading, anything. Maybe you go out and you make like a cool project that you're interested in. It doesn't need to be super complex. You like go analyze some data and have something, or you participate in a club, or you do some online program, even just something to show some interest in the area, right? Because they will notice that you're doing that. And like I said before, getting the automated interview isn't too tough. So as long as you show some interest, you have a better shot than the person who didn't. And that's sometimes all it takes. Now, having some rough idea about the domain, I would say in many cases that's enough, but it depends on your background. So as somebody who did finance and then wrote, I have options knowledge, a lot of the firms would grill me on that knowledge. So you should be careful about overstating what you do know, because retail options and sophisticated options are two very different worlds. And I got into trouble in the beginning of my interview process, specifically my first year of MCIT, when I was doing interviews, by presenting myself as somebody more sophisticated than I was. Once you pass those first couple interviews that are either the first automated one and then like the low level first in-person one, the next person up is probably someone more senior, and they're going to throw you something based off of what they think you know. If you're somebody, again, to go back to the English or history major example, who doesn't have an options background, but showed some interest and is now there, they're not going to throw you some ridiculous question to try to grill you. But if you're somebody who's claiming, hey, I trade options by myself, I at least know something about them, they're going to test that, right? They want to make sure you're legit and that you're not pretending to be someone else. So domain knowledge is enough, but be careful about overstating your knowledge and know that your background does dictate kind of what you need to know. And for some people that will be a benefit. They need to know a little bit less. And for some people, maybe you should sharpen up a little bit on either your math or your finance knowledge.
That's really interesting because it's quite different from the way that a lot of software engineering and data science, interviews are, because those are very standardized. It's essentially like, you go through each round, it's pretty much the same. But this one, it seems much more specialized, which actually makes sense that it's more personalized because these firms are also hiring less people.
Yeah,
right?
yeah. I'm sure data science is a little bit more personalized than the engineering one,
Yeah.
and then this one might be a little bit more personalized than data science.
Yeah. All right, next question is from HQ Comp Help QH. How to learn about algo trading strategies and implementing them. Best pathways / things to do in university projects to get a quant trading research job. I think that is something that you've answered already. And how important are classes like real analysis, measure theory, advanced probability theory versus stats / ML?
So, like I said, I'm not a math background person, so I have a hole in my knowledge, and some of it was made up by my own studying, getting back into retaking some of those calculus things by myself, just in online, Coursera or whatever you find on YouTube. MIT has some great courses. I have been exposed to some of real analysis and some probability theory. I would say it's not on a graduate level. It might be on a mid-level undergraduate level. But what I did is I targeted what I knew to what would be applicable to my job, which is, mental math, brain teaser style math. Jane Street is the most famous for this. You shouldn't technically, it does help to know math, of course, but in theory, you can figure out all the questions without any high-level math. And that's why I think the two most important areas probably to learn are probability and combinatorics. Those are the ones that are the most logically based and the ones that are most likely for you to test on. If you want to go on Glassdoor, I'd say the vast majority of questions are all about that. And the people who are getting questions that are not are probably math undergrads or math graduate students that they're trying to see, okay, how quantity is this person really? On the job, the level of math you're using is not anything close to the courses that you were saying, or the courses that you asked about. Those ones are much higher, and I'm not trying to tell you not to take them. If you're interested in math, they will definitely help you on the job. They're just more niche, and they aren't something you'd be using day to day. They're something that you, as a very high-level math person, might incorporate in your algo. As an aside, for practicing algo trading and for implementing them, Quantopian, which is this website you can Google, is a fantastic resource for people who don't have access to high-level data or who don't have access to, sophisticated databases that normal people wouldn't have access to. Quantopian lets you develop your own algorithm. It's very user-friendly. If you're not, a great Python coder, you can still use it. You're using calls to the Quantopian API. I promise you, it might look a little bit complex in the beginning, but you can get it. And that's how I would come up with some of my own algo trading strategies for fun and for practice, if that's really something you're interested in. So for the last part, I know you asked about stats and ML. I wouldn't say that ML or stats is particularly important for getting in. Would ML help you if they do have an ML group? Yes, definitely. You're going to need to know ML for that. But I was never asked a single ML question. I was never asked a single stats question that wasn't probability or combinatorics related or about, trying to gauge your ability to understand what would you take from these stats. There was no okay, do this sort of statistical analysis on this data set and turn it into me. Nothing difficult like that.
Right. Yeah, I remember actually we were talking when you were going through your interviews. It sounded like, so the questions weren't exactly high level math. It was very logic based, and they also cared a lot about speed. I think that's the one factor that people may not realize. And you touched on it a little bit as well. I just kind of wanted to bring that up. It's like how fast you're able to think on the spot. It seemed like a lot of the questions were targeted at that. Yeah.
So there's a website called Zetamax, ZETAMAX, I believe, Zetamax. Maybe ZETMAC, but we'll link that.
Yeah,
I think she'll link that as well.
We'll
But that is the only thing that I use to practice speed. I think if you get into the 40s and 50s on there, this might not make too much sense, but it's basically a mental math website. You're perfectly fine. There's people who are getting 70s, 80s. You don't need to be there. Naturally, I personally don't really think being super fast at math is very important, but what they're trying to test is that you can think well on your feet and under pressure, right? So the most mental math you're ever going to do during a day is you're going to look at some pricing and say, is this fair? right? That's a quick mental math question, but you're not needing to spit out a bunch of them. But that is definitely something they're going to be testing you on. And when you need to pass that interview, that is something I think everybody should at least take a few tries at the ZMAC website to brush up and make sure they're in that 40-50 range to make sure they're safe.
So the next question is from Rashad Saeed. I'm paraphrasing a little bit from our conversation. So what are the differences in the roles between trader, data analytics, and quant researcher, or whatever other roles there are?
Sure. So the three biggest roles, the three things that most people know about would be trader, quant researcher, and engineer. Quant engineer, trading engineer, they're all
Quant developer.
Quant developer, yeah, they're all essentially the same thing. So as a general sense, the trader is the person putting in trades. This means different things at different firms. If you're a very, very low touch firm, the trader is essentially risk analysis and risk balancing. You are there to put in trades at a low touch firm. Remember that somebody else has developed an algorithm for. At a high touch firm, and that's still quant, you are putting in trades that an algorithm exists for, but you're using discretion and you're better understanding of the market to decide whether you want to put them on. In this case, you're not just managing risk. What you're doing is making decisions.
That's
so
great.
yeah, that's at my firm, we are much higher touch than some of the other quantitative firms. So not only would I probably be making my own algorithm to begin with, I will also be only, most of the time, depending on the group, of course, and depending on a lot of other factors, I'm going to be using it as a tool to help me rather than making decisions for me. So that's a general overview of trading. So it can run between the risk management side all the way to the decision-making side. But in a quant firm, you're always using quant sort of tool. So for a quant researcher is the famous, like PhD style. You don't have to be, but most of them are PhD style role where you're making an algorithm or you're doing some data analysis and saying, these are buy signals, these are sell signals, these are signals where this leads to this. These are the roles where, people are getting paid big bucks right out of grad school. What they're doing is they are making models that require graduate level knowledge most of the time, and those models are making decisions. Quant researchers at firms that are very high touch, which means that basically people are putting in trades, may actually be called traders. And the people who are more quanty would just consider themselves quant researchers, but they're still traders at the firm. Rather than people who are less quanty and using it just for analysis would just consider themselves traditional traders. And then engineers are pretty much like engineers everywhere else. The only difference is now instead of doing engineering for a software company, you're doing engineering for a finance company. You definitely have more responsibility and you're more front office than somebody at a bank, but you're still doing what you'd expect at an engineering job.
Do you make more if you're a quant developer as opposed to just a normal developer?
It's hard to say exactly, and I don't have too much domain knowledge about that, but you definitely do have profit sharing.
Okay.
You'll give up the vesting of stock, as most of these companies don't have any stock, in exchange for the profit sharing. And that, it gets dicey depending on your experience, depending on the firm. I would guess at the super quant funds like a 2 Sigma, you probably are making a ton of money being a quant engineer or some type of developer, a quant developer, but I wouldn't be able to put a number on it right now.
Right. Yeah, I mentioned that because I've talked to people who wanted to go and become quant developers because they're like, I'm doing engineering anyway, and the hours are pretty much the same, but I also get to invest in the fund. So that's kind of why they made that transition. Final question by Booker is, how stressful is it? How often do people get fired? How long do people stay in the line? I heard that each decision you make could potentially cost the firm a lot of money, so it's extremely stressful and unsustainable in the long run. But then again, the money you make from those few short years would be enough for life.
Well, I guess hopefully that would be the optimal case. But how stressful is it? Trading is definitely not a low stress job. But like anything else, the enjoyment you get from it or how stressful it is to you depends on if you chose it because your personality was a good fit, if that makes sense. It's like asking how stressful is it to be like an athlete, right? So if
Yeah.
you love being an athlete and you love the sport you play, you love that adrenaline, right? You go out there and you're like, I love being challenged every day. And like in any other thing, when you're an athlete, if you play poorly, you risk getting benched. In training, if you're poor, you risk tapping on your shoulder and saying, hey, do better. Or, in the worst possible case, you risk saying, hey, we're going to let you go. I would say people tend to stay in the line. It's like biased in one of two directions. Either you're there for the long haul because you love it, or you're out quickly because you don't like the work and you don't have any fun doing it. There are people who get fired because things don't go well, but I would say the risk of getting fired is firm dependent. You're more worried about your firm not doing well than anything else. You're worried about the case where the firm took a really bad strategy and that causes them not to be able to hire as many traders the next year. In the bigger firms, this isn't really much of a concern. It's more in the really small ones. What was the other part of the question?
I think you answered most of it. Yeah. Oh, here we go. Yeah, I think you actually answered most of it. So I guess like the last part is like how long do people usually stay?
Oh yeah, I guess going back to that, I would say like maybe at a certain firm, I'm seeing people stay, I don't know, 10 to 15 years, but it's like, again, one of two, it's influenced so much by one of two outcomes, right? Either you're out 1 to 3 years in after training, right? Including training, right? So you're really out 1 year after training because you just decide you hate it, or you're just, some people just, that isn't for them, and that's fine, right? But on the other hand, I'm seeing a lot of people at my firm and at the previous firm that I was doing an extended internship at, they're there for like 20, 30 years. Pretty much they go there and they stay there. And those are the people where it's for them, right? And these are reputable firms, high dollar firms that don't deal so much with the inter-year turnover. So to summarize, the two things are, one, do you like it? If you don't like it, you're probably not going to stay. And the second one is the firm very exposed to certain market conditions? Firms that tend to be more exposed, take more risk on, yeah, maybe they have great years, but then there's going to be years where they have to lay off a lot of people. So those are really the two reasons why. And the second one you can get out of by choosing to go to a firm if those firms are recruiting at the time that is more diverse in terms of strategy and won't have that risk. And the first one, it really depends on the person.
Yeah. I mean, bottom line is it's similar with software engineering or data science. The money is good. I mean, the money is even better here. But if you don't like what you're doing, it's gonna be rough. And especially when it's such a high risk part. Like you guys are pretty performance based, so I would assume it's a lot harder to sustain that if you just really don't like your job.
Yeah, and I would mention that too. There are people who go into software engineering because it's such a generous salary, and the job is in some cases a place where they can have less stress and they can develop things that they want to do or that the firm or that their company I guess wants them to do, and they don't need to worry about getting fired for the most part. In trading, in the beginning, a lot of people have a hard time if they're not really into it because they don't have, in many cases, that super high salary. They're not looking for it during the training period because they're not trading their own book. They're not trading to make money, and they're stressed every day, right? So if it sounds like, one, I could be making more money because these people are probably intelligent enough to be a software engineer most of the time. I could be making more money doing something else, and I could have more fun during my day doing something else, right? Then this probably isn't something that they're going to want to do, and they're probably going to leave.
Yeah, I mean, 1 to 2 years of training, you're like, oh, if I do that and I stay for 5 years, then I can make, $500,000. That's a really long time. That actually still is a really long time to do something that you don't like. So yeah.
Yeah, and the amount of money you're making over those first few years is honestly less, right?
Yeah.
So for people who that's an important consideration, that's just one more thing that they need to think about.
All right, super fun lightning round. Lightning round is when I ask you questions that I make up in my head right now because I didn't think of them yet, and then you'll answer them. Generally, just try to answer them a little quickly, but if you want to expand on them, feel free to do it as well. So, first question. Let's see. If you couldn't be a trader, what would you do? would you go back to iBanking?
No, I would definitely not go back into iBanking. That's a really, really hard question.
Yeah.
I guess the thing I was doing after I was very unhappy following iBanking was I just started playing piano again. So
Okay.
maybe I would do something in music, but music's a really hard field.
Oh yeah.
And it's not something I could have confidently said I'm doing this because I'm so passionate about it. So at the time I was just like, it's a good hobby.
Mm-hmm. Okay, cool. What are you gonna spend your first fat bonus? Are you gonna buy a yacht?
No, I don't think I'd be able to anyway. I don't know. I guess save it is the appropriate
there you go.
answer.
Invest it again. Right?
Yeah, invest it again in your
make-
personal account.
There you go. That is how you know you're a real trader. You make money, don't even spend it. You just want to make more money. Okay, cool. Let's see. If you were to redo your path, right? I mean, maybe you don't want to redo your path, but if, like, you know, if you wanted to redo your path, what would you change? Would you still have gone, like, in terms of your undergrad? Would you still have done what you did, and then I guess you wouldn't go to iBanking because you don't like it? Yeah.
So I always am really, I guess, reticent about this question because the path that you went on kind of caused you to become who you are, right?
Yes.
But assuming that I am still the same person, I think the best stuff to do in undergrad, honestly, is some type of quantitative major. Anybody can do finance after being too quantitative, but people in finance have a much harder time going the other way. And knowing what I know now that this is what I want to do, I'm having so much fun doing it. It would have helped me shorten the path and get there sooner and be better by having done that quantitative stuff first instead of later.
Fair. Okay, last question. What's 32 times 18?
32 times 18.
I'm kidding. But that actually is representative of the question that they would ask you, right?
Yeah,
You know?
yeah. That is the type of
Okay,
question.
I'm not going to make you do it on camera. Don't worry.
No, there's too much pressure on camera to do that.
Okay, cool. Yeah, I mean, that's pretty much everything that I had.
So don't get discouraged if it isn't the first year, if it isn't the second year, if you're an undergraduate student, or if you're a professional trying to change. Just keep trying to stack the deck in your favor. Keep trying to do things which look strong and attractive, whether that be working on things that you're interested in or sharpening up on your mathematical skills. Definitely is going to help you in the interview. Both of those things eventually will help you become a stronger candidate. This definitely isn't something I want to reiterate, where if you don't have the knowledge, you can just jump in and, day one, you're ready. It will take some time to develop it.
Fair. So thank you again so much for coming on the show. I really appreciate it. And I also learned a lot myself as well. I'm sure you guys are as well. Giving us some insight into this mysterious field of quant trading and hedge funds. So yeah, thank you again.
Thank you for having me.
All right, I will see you guys in the next video.